Hello, and welcome to this corporate courses guide on the price to earnings ratio. Let's get started. So what exactly is the price to earnings ratio? Well, first, I think it will help us to identify what names it goes by so you'll know exactly when you see it. The first one is the PE ratio, but can also be known as the multiple of a stock. The price to earnings ratio also goes by other names, which can be other types of PE ratios. One of these is called the forward PE ratio, which is based on forward statements or expectations for the stock. But there is also trailing PE ratio and the 12-month trailing PE ratio, which are other forms based on previous data or past earnings. So, from here, I think we need to know how do we calculate the PE ratio, because once you know how to calculate it and what goes into it, you know how it can be manipulated and how it should be used. So, if we take the price, which let's say is $100, and then we also use the EPS or earnings per share, which is basically earnings divided by the per share price, which can be found on Yahoo Finance or finviz.com, that will help give us the PE ratio. So if we have price in the numerator of $100 and in the denominator we have the earnings per share at $10, this will give us a PE ratio of a 10 multiple. So what does this mean? Well, there's 4 different ways that this can be taken. It can be taken as its expensive stock, or it can be trading at a discount. But an expensive stock can also mean that the market thinks that it's going to grow, whereas a discount can mean that the market thinks that it's not going to grow because it's trading as a discount to its earnings. So if we use another example, here's Apple, which is trading at a 20 multiple, and then we also have Microsoft, which is trading at a 10 multiple. That gives us an idea relative to its competitors, which one's more expensive or not expensive. And then you can also look on a broader market, saying as S&P is trading at a 15 multiple, which gives you an idea of how it's trading relative to the broader market. And the PE ratio can also be used to look back in history to see how a stock has been previously expensive or inexpensive. So, to do this, what you would do is you'd go to bigcharts.marketwatch.com is one of the sites that I use, and it will chart out the PE ratio over time so you can see when a stock seems to be expensive or trading towards a discount. So if you like this video, go ahead and comment, rate, and subscribe, and let me know in the comment section what videos you'd like to see. Thanks for watching.